traders and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here live from UBS's European Conference in London. Our studio looks a little bit different today. These are our top stories. The U.S. government shutdown could end as soon as Wednesday when the House votes on a temporary funding bill that's been passed by the Senate. UK unemployment hits the highest since COVID, prompting traders to raise bets on a December rate cut by the Bank of England. Plus, SoftBank reveals that it's sold its entire stake in Nvidia as it reported second quarter earnings that came in 3.5 times above estimates. Now, we have some great guests joining us here at the UBS conference, including the bank's EMEA president, Beatriz Martin, Simon Gass, of course, former chair of the UK's Joint Intelligence Committee, and we'll talk about defense and always the markets never far behind. Now, this is a picture across the board for what we're seeing in stocks. And it's very clear that the rally in stocks seems to have faded somewhat amid renewed caution over some of these lofty valuations in AI. Also, Japan's SoftBank selling his stake in Nvidia maybe sends a little bit of question marks across the board. Now, the other thing is actually dollar. I'm looking at dollar heading for its first gain in five days. The pound leading some of the losses amongst major currencies as unemployment in the UK is rising more than expected. Look, if we have the end of the government shutdown, it means we're going to have a lot of data coming in. It could be fast and furious, and that could also reprice expectations for the Fed. In terms of the European markets, there is a little bit of a divergence amongst the main indices. If you look at European stocks, look, they're bucking the risk-off trend in general. So let's see if we have the European markets. Otherwise, I can tell you they're actually rising a touch. Now, the record-setting 41-day U.S. government shutdown may end as soon as Wednesday. This is after the Senate passed a temporary funding measure backed by a group of 8 centrist Democrats. Well, Bloomberg's Hong Kong news editor Balazs Pence joins us now. Balazs, thank you for joining us. Look, there's quite a lot going on. How quickly can this be resolved?
Well, Francine, it looks like the record shutdown might be over in what feels like record speed. Just yesterday, we found out that 8 Democrats broke rank and made an agreement with the Republican majority in the Senate. Today, the Senate already passed the resolution, and the House scheduled a vote for Wednesday. And it does seem like the razor-thin Republican majority in the House will hold together and be able to pass this resolution, which can then go to the president's desk. And President Trump already said he is behind this deal. He backs it, so we can expect him to sign it very quickly. So that shutdown would end then, potentially as soon as Wednesday, U.S. time. Now, it will take a few days until air travel is restored fully. It will take a little bit of time until people can start receiving their federal payments that have been held back, but the end is certainly in sight.
Balazs, how much damage could this do actually to the Democrats long term?
Well, Francine, I think we have to look no further than the reaction of the Democratic leadership. Both in Congress and across the country, including Democratic governors like Gavin Newsom and J.B. Pritzker, have sounded furious about the deal. Just a week ago, the Democrats were riding high off their off-year election victory. Part of the reason for which was, they said, that the American people were behind them in this shutdown battle. And now that's not the picture that they're projecting. They are projecting the picture of a fractured party with a lot of dissent inside, and again struggling to present a united front, again struggling to present a united message, while the Republicans on the other side held firm and got everything they wanted while giving the Democrats none of what they were trying to get.
Balazs, thank you so much. Bloomberg's news desk editor, Balazs Pence. Now to a Bloomberg scoop, and we understand that Switzerland close to securing a 15% tariff on its exports to the U.S. The deal, which may be concluded within the next 2 weeks, would be a relief after Switzerland was hit with a punishing 39% levy in August. Elsewhere, President Donald Trump says the U.S. was getting pretty close to a trade deal with India. For more, we're joined by Bloomberg's Brendan Murray, who, of course, is in charge of our global trade coverage. Brendan, what do we actually know about these potential deals?
Well, these have been two of the toughest deals that the administration in the U.S. has tried to get over the goal line. India has been negotiated for several months, 6 or 7 months, and they've been saying all along that it was close. So the fact that they're optimistic now suggests that they've gotten through some of the more difficult issues and that they're close to announcing something of a framework sort of trade deal that similar to some of the others that have been announced across Southeast Asia. The Swiss deal has also been imminent for several months now, but it seems like the mood music from both sides, the Swiss and from Washington, is that they have got some sort of outline of a deal and that it could come together, as Bloomberg News is reporting, over the next couple of weeks.
The Wall Street Journal, Brendan, also reporting that China is designing a validated end-user system for rare earths. So what can you tell us about this?
Yeah, so this sounds like some sort of easy pass lane for the rare earth permits that China is issuing. China is trying to distinguish between commercial uses of rare earth materials like magnets and military uses, and it sounds like China is setting up a system that will help speed the commercial use and prevent the military use that their permitting system, which is mirrored on the U.S. export control system, is trying to accomplish.
Brendan, thank you so much. Brendan Murray there with the very latest on some of these possible trade deals. Now, to look closer at the financial impact of the Swiss trade deal in the U.S., we're joined by Beatriz Martin, EMEA president at UBS. Bea, thank you so much for joining us. Actually, we'll get on to Switzerland in a second, but I want to get a take on what your clients are asking of you right now. I mean, the sand is shifting. There's a lot of things that they can worry about. What's like your best piece of advice to them?
Thank you. Great to be here. Thank you, Francine. So our clients this quarter and throughout the year have been really very interesting in having investment advice. I think these markets are difficult to navigate. I think when you see all the movements that we're seeing in the different asset classes, we've seen really strong net inflows this third quarter for us, and I think clients are still very supportive of the markets. I think they feel that the need and for investment is still there, and they see robust markets holding on, so they want to participate on them, and they are open to take advice.
What are the big four? I mean, the big force driving is, of course, AI and AI valuation. Are you expecting some kind of market correction, either in that or in credit?
Oh, wow, that's
It's a big question.
It's a big question, yeah. I mean, there's no doubt that we've seen valuations, very strong in both credit and AI. I think, I'm not an expert in, equity valuations, of course, but I feel like, we're still seeing very strong cash flow generation from some of those firms, and I think that supports the valuation as long as, we see CapEx still at levels that are, being funded through cash flow. I think that's going to be something that will continue going on.
When you look at Europe, where do you see the biggest opportunities? So is UBS hiring? I don't know whether AI means that there are job losses, and how you see actually all of that world adapting.
Well, I mean, we are quite a strong European bank. Obviously, as you know, we have a very strong position in wealth management. We're the biggest wealth manager in Europe. Europe is really our backyard. I mean, we have been here for a very long time, and we are present in 22 countries. We have almost 30,000 people in Europe, so we have a very strong business across the board: wealth management, asset management, and the investment bank. For us, Europe continues to be a very important market. We make around a third of the total PBT for the bank here, and so we still see quite a lot of growth. There's no doubt that the bank is focused on growing the APAC and the US franchises, but Europe is still quite an important one. We are very global, so we are very global reach with a local presence that is very strong. We've been very focused on growing our presence in the Middle East, post the acquisition of Credit Suisse, of course. And the acquisition of Credit Suisse has given us, critical mass in a lot of other countries in Europe. I think there's huge expectations on Germany, if I'm honest, with all the investments that are yet to come, but definitely quite a lot of interest for investors to be part of those opportunities.
But I mean, the integration of Credit Suisse has been, one of the biggest things that almost any bank in Europe has done. How is that going in terms of data migration?
It's going well. I mean, we are coming to the end of it. I think Sergio commented on his interview as well. We are done 2/3 of the clients in Switzerland. We still have the end to do, and of course, as you mentioned, data migration and storage is going to be one of the biggest things we do. We need to bring that to a completion by the end of 26. But I feel like we've done great progress so far.
So you also have a new role. Congratulations.
Thank you.
A big new global role that starts in January. How will actually your job change?
Well, I mean, I'm going to keep doing what I'm doing, and I'm going to add that role to my, to my set of roles. And I think for me, the COO role is one that will be focused on bringing the bank closer together, I think, for clients and also front to back, looking at what are the efficiencies that we can achieve when it comes to infrastructure, to IT investments, for example, but also in the way we serve clients, the products we cover, and how can we really integrate, continue integrating the bank.
What will your priorities be? I don't know whether there's, you've thought about freeing up capital, for example, for the U.S. business, or is it, Middle East and Asia?
Yeah, I mean, for me as the head of EMEA is to continue to be, EMEA, and when it comes to clients and the clients we cover here, continue to grow in the franchise in EMEA, I think will be quite important. And, we have great opportunities because I think the expectations for 2026 for EMEA are really, really strong.
This is what, in terms of IPOs, are there enough things in the pipeline in terms of deals that will come up? And is it because it starts from a very low base, or do you actually think that the animal spirits are back?
I think valuations in Europe are somehow more palatable than, in the US for sure. But in general, I think the interest in investing in good, good firms and corporates in Europe is there. I think the conviction in the boardroom to actually go into M&A in particular, I think is stronger than it has ever been before. The pipeline is very healthy, and therefore I expect, good deal flow as we go into 2026, yeah.
But do you think there's been a shift in clients' minds? I mean, we're just covering, 2 potential deals with the U.S. One of them is Switzerland. I don't know whether clients in general have just become much more used to these changing flows, the trade, the tariffs and the trade, and so it's part and parcel of what they just need to deal with.
Yeah, I think the uncertainty in the markets have been phenomenal over the last year or so. And I think clients are getting used to selectively looking at news and trying to understand what it means for them. And of course, for us, again, as a global bank, I think it's more than ever is important to be really close to what clients are thinking with, solutions and opportunities and alternatives for investment.
When you look at the ultra-high net worth individuals that you've also, I guess, gotten from Credit Suisse, are they behaving differently from some of, the other clients?
No, they're not. I think ultra-high net worth individuals are very sophisticated investors that are close to, the things that perhaps other more institutional investors are doing. But thanks to, our global reach and the seamless, coverage that we have for clients, showing up as one bank, I think we are able to provide, with the needs that they have.
Are they asking a lot about the UK? There are many question marks about the UK and where the UK economy goes because of taxes. Yeah,
I mean, look, the UK, I think we are expecting, or all waiting to see what the budget is going to give us at the end of the month. I mean, Rachel Reeves has already been commenting on some of the things she's thinking about. I don't think, we can speculate at this point on what those are going to be. It's a very difficult situation. It's a very difficult budget. And, we just need to see what those measures are going to be at the end of the month.
But where do your clients want to deploy cash? Is there a pattern from some of them on where they want to be invested, or are they still a little bit in the corridors?
No, I said we got net new inflows this quarter. I think clients are still, looking for opportunities to invest in different sectors. AI, definitely one of them, healthcare, energy transition, and many others. And I think, the ability to be able to advise those clients on the opportunities globally and also locally where they are located is really important and one of the strengths of a bank like UBS.
Yeah, you singled out Germany. Is Germany really a sea change because of how much they're spending on defense?
Yeah, I think there is a big expectation that Merz is going to, open the taps at some point and go on with all the investments, particularly in infrastructure and defense that have been already announced. And there is, I think from all sorts of clients, not only wealth management clients, but also some of the sponsor clients, for example, how to position to be, able to take part on those investments is something that we are definitely helping them with.
And so what is the right way? Is it, public-private partnerships? I mean, there's going to be a lot of infrastructure, certainly if the Draghi reports gets implemented.
I think
big question mark.
I think we don't know yet, to be honest. I mean, we've been very close to the government, if I'm honest, and trying to, advise them and get them some feedback from clients on things that they could consider. But at the moment, I don't think anybody knows exactly how that is going to pan out.
But, I mean, there's so much conversation, of course, about the capital requirements in Switzerland. I mean, does that kind of dominate, in general, some of the conversations you're having internally? Well, look, I mean, I think Sergio covered that in the interview after results. I think for us, we just have to wait to see how that process is going to continue. This is not a negotiation. We've said that many times, and we just need to wait and see how that is going to come out. Beatriz, thank you so much for joining us. That was, of course, Beatriz Martin, EMEA president at UBS. Now, as the Trump administration looks to speed up weapons procurement, we'll be speaking with the co-founder of Dauntless Ventures about the next generation of America's defense industry. That's next, and this is Bloomberg.
Earnings season is here.
It is a busy, busy week for earnings.
More buybacks, more dividends, margin compression.
Bloomberg is first to break the numbers.
We have some earnings crossing.
We'll bring you Deutsche Bank, UBS smashes Santander, beats on net income. Investors brace for more earnings.
Let's get the reaction and context.
With the smartest insights.
Maybe this German fiscal stimulus is going to start to hit the economy and come through in corporate earnings.
Continuing coverage on Bloomberg.
The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua, live from UBS's European Conference here in London. Now, U.S. Defense Secretary Pete Hegseth has challenged major U.S. defense contractors to speed up weapon developments or fade away. The Trump administration is moving to overhaul America's slow defense procurement process in a shift that could benefit tech companies and startups. Now, Dauntless Ventures is a firm backing early-stage companies in the defense sector, and it's been selected by the Department of Defense for its new venture capital program. Well, joining us now is Pete Koziol, co-founder of Dauntless Ventures. Pete, thank you so much for joining us. Look, you're in the space that everyone either wants a part of or is really trying to understand. Like, what do investors don't get about how difficult it is actually to, I guess, back early stage, because you don't really know what makes a success in like 5-10 years?
Yeah, well, appreciate you having me, Francine, and very glad to be here on Veterans Day in the States. Dauntless is a U.S.-focused investment firm that backs daring entrepreneurs building the next generation of the U.S. defense and industrial base. Our view, though, is that though we're U.S.-focused, we're extremely ally-aware. And the reason we're here in Europe today is because we see an enormous opportunity for U.S. defense technology companies and young entrepreneurs building the next piece of innovation for the warfighter to also sell that into Europe, into Japan, into places like Korea, because in our view, alliances will be strengthened, and there's a new global security common that's being built around this idea of shared defense technology.
Pete, what are you looking at in terms of technology? So is it, there's a bit of everything. It could be robotics, it could be like anti-drones, it could be missiles. What's the next generation of defense that you're looking at?
I think the experience in Ukraine and obviously the fight that's being sort of trained for in the Pacific is heavily indexed to drones and autonomous, really an AI-enabled autonomy. And so those are areas we're focused on. I think also in the States, the issues around rare earths is really one of many sort of issues in the supply chain that as Dauntless we're focused on not just defense technology but also defense adjacent technologies. And so the scope is wide, and the breadth is it's really just kind of 21st century writ large is our focus.
How do you look at actually rare earths? So is it recycling them, which is we're hearing that from many parts actually of policymakers, that the quickest way to get enough of this stuff is to make sure that we reuse?
Recycling is absolutely one piece of it. I mean, we've spent a lot of time on the rare earth supply chain. I think what you'll find is it's less about finding the rare earths, which aren't as rare as people sometimes like to believe. It's really about refinement and then magnet manufacturing. And so, what we've really focused on is trying to find young companies with potential IP that's formulating magnet manufacturing in a different way.
How does cybersecurity look like differently? If there was a big war in 5 years, does it look materially different to anything that we've ever experienced?
Yeah, I think cyber permeates everything from the manufacturing base to current operations abroad. Cyber is an area that we're aware of. We're not super focused on it from an investment perspective, but again, it's similar to AI. It's sort of an enabling technology that sort of spans all categories.
What are you most, excited or worried about now?
It's a great question. What we're really focused on is sort of the undersea domain right now. Our belief is that so much of the future of warfare is going to be moving to space and then subsea, and so we're trying to find autonomous solutions and sensor solutions that can effectively give both the warfighter awareness, but where we also see there being massive opportunities in the commercial sector via port security, undersea cable security, needs for the insurance sector, et cetera. And so again, we're not necessarily defense exclusive, but we're looking for companies that have both defense use cases but also commercial markets.
But because you're an early stage investor, what do you look for actually in a company that will be successful? And is the goal that then they get bought out by someone bigger, or is it standalone and IPO? Yeah,
that's a great question. At an early stage, you're really backing a founder, and so you're looking for founder market fit, a founder that's either operated in that environment before or has some very unique, piece of insider knowledge around a product or a platform that they want to build that they think doesn't exist in the world. I think the market structure of defense is an interesting one, right? Because it really requires scale, and I think the Secretary of War last week laid it out really well that we need to move faster, we need to innovate, but I don't think it necessarily means that defense primes around the world are sort of dead. Like, I think they're going to play a very large role in sort of the future of defense spend, and so naturally I think it's the defense industry is one that is ripe for consolidation and ripe for scale. And so our belief is many of our companies will end up being capabilities that get bought by larger defense primes.
But how much consolidation? Because I know in Europe there's, if you're almost like a national defense company, it might be difficult for a country to let it go. I know in the US it's different, but can you actually see like cross-border consolidation?
Yeah, that's an interesting point. I'm not an expert on the European defense scene. What I will say is there are very different. I think one of the things as an investor that's European aware and that we think a lot about is how that situation evolves specifically between France and Germany and the UK, and how those primes in each country. How that all kind of shakes out from a sovereign capability perspective.
As allies and allyships change, does that actually change where you can sell the technology to?
So the Secretary of War on Friday laid out I think a very ambitious plan for opening up the U.S. Defense innovation space to foreign military sales. I think that's a huge piece of where we see our company's opportunity. And if you think about how do our companies grow revenue pool and potentially increase their multiple, it's by diversifying their buyer base. And we think that the allied buyer base, specifically NATO, Korea and Japan, is a huge opportunity for U.S. defense exporters as sort of markets to enter.
How will AI robotics change in the next 5 years? This is the most difficult question of the day.
Yeah, it's going to permeate everything, and it's to the point that we're including it in our investment process at Dauntless today. So I think the world is going to change so much, but at the end of the day, it's still going to require great young founders to sort of conceive of new things that don't exist and then build them.
One of the ethical questions, the big questions, is actually how to use technology for good and not bad. Do you have like an ethical line of what will be invested in?
Absolutely. I think our firm is deeply rooted in the moral belief that defense is a sovereign and individual right, and heavy subscribers to just war theory, and we think about that a lot in the investments we make. We want to make sure that they're We're backing founders building technology which will make people safer and make the world more secure.
Pete, thank you so much for joining us. Pete Koziol there, co-founder of Dauntless Ventures. Now we'll have plenty more throughout the day here at UBS. UBS warning the contagion risk from private to public credit markets is real and actually underappreciated. So we discuss all of this with Matthew Mish, head of credit strategy at UBS. This is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua at UBS's European conference here in London, and these are your top stories. The U.S. government shutdown could end as soon as Wednesday when the House votes on a temporary funding bill that's been passed by the Senate. While UK unemployment hits the highest since COVID, prompting traders to raise bets on a December rate cut by the Bank of England. Plus, SoftBank reveals that it's sold its entire stake in Nvidia as it reported second quarter earnings that came in 3.5 times above estimates. Now, Wall Street has been shaken in recent weeks by the collapse of the auto parts supplier First Brands, which filed for bankruptcy with more than $10 billion in debt. Major financial institutions like UBS had significant lending exposure to the company. Now, in its new report, UBS is also warning that contagion risk from private to public credit is real and underappreciated. So let's discuss all of this with Matthew Mish, head of credit strategy at UBS Investment Bank. Matthew, thank you so much for joining us. And there's quite a lot of people trying to understand where credit goes. So when you say that the risk is underappreciated, what do you mean?
I mean, our view is essentially that you now have private credit that has permeated public credit, but the two are essentially interconnected. And you see that on the issuer side, we see that on the investor and the borrower side. And ultimately, we believe that it is a key risk for 2026 and beyond. It's probably the key risk. But we generally, at this point, see a steady increase in defaults and credit losses. We're not alarmist. We don't think that this cycle is yet over. We feel like it's late. Yep. And we'll be watching it closely. But I think the real threat is if you get a sector like tech or like business service where you see a specific surge in defaults. Aside from that, It's something we're monitoring. But at this point, we're relatively comfortable with the near to medium term outlook.
But Matthew, when you say biggest risk in 2026, could it be a systemic risk? Because this is growing. A lot of, what's being offered is also to retail investors.
Yeah, if you take a longer term view, right, I think the public and the private market vehicles are now essentially being marketed together, right? So it increases the connectivity between institutional and retail clients. And as you go through 2026, we've had a massive amount of issuance, right, so far this year. So even just in the last month, we've had over 60 to 70 billion in issuance from the hyperscalers in just the U.S. investment grade unsecured market. And so our expectation is that that will continue because the hyperscale CapEx plans look like they're going to be up, call it another 30 to 50% next year. And so if debt becomes more and more of a key pillar to finance that capital spending, then I'm not so much worried about into the end of the year and into early or the first half of 2026, but I do get more concerned about the overall aggregate amount of debt that could be in the system toward the end of 2026 or going into early 2027.
But do you think today that the credit markets are overvalued?
We think modestly. I mean, we are looking for widening, but the order of magnitude is important to highlight. So in the U.S., we have high grade and high yield spreads that we think should be trading essentially closer to 90 to 95 and 325 to 350 basis points. So that's a moderate widening of about 10 bips and about 40 to 50 basis points. Obviously, high yield, as an example, has historically traded as tight as 260 and as wide as 700, 800, 900 basis points. So we do think it's overvalued, but the margin of overvaluation is fairly narrow.
Matthew, what makes European investment grade more attractive than the U.S.?
We like Europe a lot for a few reasons, right? One is obviously the overall exposure to private markets, but also to AI and tech is much lower, right? It really is very much a U.S. story or a U.S. and a China story. The second thing is we do like the fiscal impulse coming through in a positive derivative perspective for Europe. And the last thing, to be honest, is as credit investors at this point in the cycle, you want carry that you can trust and earn and sleep at night. And really, Europe, we think, is in this place where it's not too hot and it's not too cold. So Euro IG, we expect to outperform quite notably, not just in the baseline, but in a number of up and downside scenarios relative to US IG.
But I mean, most insurers piling into private credit basically worry about ratings or chasing ratings. How much of a problem is this?
So I think it's an isolated problem, but it is a problem. So if you look at various research out of the IMF, the BIS, and some of our own work, the insurance industry, for example, has increasingly relied on private letter ratings, but it is not, I would argue, a widespread phenomenon. And in fact, in the essay that you're alluding to that we wrote earlier in the week, I think that it's more a concern in terms of systemic risk or risk back to the financial sector at the actual company, the company level. So I believe that for PE-linked insurers, it is a material concern in terms of their use not only of private letter ratings, but also their increase in exposure to securitized products. But you could look at P&C companies, right, and certain life companies in the U.S. where they've been much more conservative. And I think the balance sheets and the overall investment underwriting has been much more conservative, much better.
You've written some really engaging notes that were like right on point, but it feels like a lot of market, or actually investors, maybe miss some of the downfalls. Do you think there's little understanding of the space?
I think that the honest answer is that if you know where to look, almost like an investigator, and you build a mosaic of what's going on, which is what we've done in our research, I do think there's a lot of information about private markets. And I would make it clear that I don't think the transparency is as poor or it's as unknown as the way some in the media classify it. And I think that's part of what we're trying to do, is cut through the fluff, or quote unquote the smoke, and really make sure that clients understand on a real-time basis what's going on in the market. Defaults are a great example. There's been, as you say, 2 to 3 very large credit events over the last 4 to 5 weeks. We're out in the market making the case that we're not seeing the next first brands right now. We're not seeing large evidence that that's a trend or a phenomenon that is accelerating. And that's important. So I think we're trying to show the downside and the upside risks in that market. But the current view that we have is kind of for steady and moderate deterioration. But at this point, to us, it looks like late cycle, not the end of the cycle.
Matthew, thank you so much for joining us. Matthew Mish there, Head of Credit Strategy at UBS Investment Bank. Now, more signs that the UK jobs market is cooling, with unemployment hitting 5% in the 3 months to September, the highest since the pandemic. While headline wage growth also unexpectedly fell. Let's get straight to Dan Hansen, Chief UK Economist at Bloomberg Economics, who joins us. Dan, always great to speak to you. Tell us a little bit more about the data and what does that mean for the Bank of England?
Yeah, morning, Fran. Great to see you. So a few things from me. I think the first is, obviously, as you mentioned, there's the unemployment rate. That was the surprise this morning. A little bit higher than we expected, a little bit higher than consensus and the Bank of England expected. And the other thing, the big bit of news, is on wage growth. Now, that was in line with expectations, but what we've had over the course of this year now is this relatively gradual fall, but marked fall in wage growth, particularly in the private sector. And those two things taken together, I think, are obviously music to the ears of the doves on the Bank of England. I think, to answer your question directly about how it might affect the Bank of England's thinking, the person we really need to watch is Andrew Bailey, and where he thinks this data, what this data means for the likely path of rates. He is what I would call the swing voter on the committee now. It was a 5-4 vote in November, and he was the one that voted for a hold, asking and waiting for more information. But there's no doubt this again pushes the bank, I think, probably towards a December cut. It's not our baseline just yet. We want to see the inflation data. We also want to see the budget as well. That's a big event, obviously, coming up. But there's no doubt, taking out the margin, this data puts a December rate cut, increases the chances of a December rate cut.
Yeah, and Dan, I mean, again, first of all, the data we had today from the UK is not good news for the Chancellor. I know there's been a huge repricing of what the market is expecting the Bank of England to do in December, but how difficult is it going to be for the Bank of England to make an informed judgment? I know there's like 2 data points, but it's not going to be materially different.
Well, and I think that's a really interesting point, because what we had in August was a story from the Bank of England where they were very worried about inflation, the persistence of inflation. Fast forward 3 months, we're now in a place where they're a lot less worried about the persistence of inflation, and that isn't a huge number of data points, and we almost get a similar number of data points between now and December. So I think having real conviction in where the bank is heading is difficult. All of that said, I think the signal was relatively clear in the November minutes, and for us, it's a toss-up between February and December. We're still in February at the moment, but all you need, I think, is a downside data surprise on inflation and obviously a budget that is disinflationary. And I think that will probably tip the balance towards a December cut. I think the key thing here, though, is that we're not talking about a series of rate cuts. I think the bank just wants to get to a neutral policy stance. So that might mean 1, maybe 2 more rate cuts. And I think they'll be happy to sit on their hands, because remember, inflation in the UK is still high, and it's up at 3.8% at the moment. It's going to fall back, we think, over the course of 2026, but there's still quite a way to go till we get back to that 2% target.
Dan, thank you so much, as ever. And of course, great projections. Bloomberg Economics Chief UK economist Dan Hansen. Now, on to big corporate news. SoftBank selling its entire stake in Nvidia, pocketing $5.8 billion ahead of a rash of planned investments. Now, that sale and a windfall at the Vision Fund startup investment unit helped SoftBank report net income of $16.2 billion in its fiscal second quarter, far ahead of estimates. For more, we're now joined by Peter Elstrom, Bloomberg's executive editor for global technology. So first of all, Peter, just a very simple question. As everyone's talking about AI valuations and they worry, is it a bad sign that SoftBank are actually selling off their Nvidia stake?
That's a big question here. Yeah, Masayoshi Son decided that he's going to sell off all of his shareholdings in Nvidia at this point and take the $5.8 billion that he made from that stake. Now, we just got the conference call from the company in Tokyo just a few minutes ago, and there the CFO said that that's actually not the case. It's not because they have any questions about Nvidia or Nvidia's growth prospects. Instead, what they really need is they need that money to be able to make their own investments. They want to invest in AI in a number of different areas. They're partners with OpenAI, of course, in the United States, with his Stargate venture, where they plan on investing $100 billion, maybe $500 billion. We've also heard plans about an Arizona manufacturing facility where they want to invest hundreds more billion dollars. So really, Masayoshi Son and SoftBank are trying to collect that money to be able to make their own investments from here. It's not supposed to be seen as a sign of an AI bubble. In fact, Yoshimitsu Goto, the CFO, got that question, are we in a bubble? And he said, we can't really tell from here. So he's not quite as definitive as maybe a Jensen Huang at Nvidia or Sam Altman. They're just saying we can't see it from here, but they are continuing to make these investments.
So, Peter, how did SoftBank do so well? How were they able to have these incredible profits?
Yeah, it's worth breaking down the numbers. SoftBank has an enormous portfolio of companies, and so they mark up and down the market value of those companies each quarter. Their earnings can be very, very volatile. But what we saw is they made $16 billion in the most recent quarter. That's about 6 times as much as analysts had been expecting on average. A lot of that money came from their private company holdings, the ones that they hold through the Vision Fund, their Latin American Investment Fund. And the biggest part of that was really OpenAI. They said about $13 billion out of $19 billion in gains came from marking up the valuation of OpenAI. You'll recall that that company just last year was worth about $150 billion pre-money valuation. It went up to $260 billion, and now it's at $500 billion. So that's been a very sharp increase, and they've been able to cash in some of that money. But they have other holdings too. They have Perplexity AI in their portfolio. They have Runway AI, which is actually a pretty hot company too. So there's a lot of companies in that portfolio where they're getting some gains at this point.
Peter, thank you so much as ever. Peter Elstrom, there, Bloomberg's executive editor for global technology. Now, coming up, we'll be discussing all things security with the former chair of the UK's Joint Intelligence Committee, including the EU's potential ban on Huawei from its mobile networks. That's next, and this is Bloomberg. The conversations that matter, the insights you need. This is The Pulse. I'm Francine Lacqua, live from the UBS European Conference here in London. Now, there's a lot going on since Vladimir Putin's invasion. The need to develop and fund weapons has pushed Ukraine to become a drone superpower. Now, as Europe is confronted with a wave of airspace violation, Ukrainian companies are looking towards European markets. Well, Pavlo Shevchuk, the international CEO of Skitan, a Ukrainian drone firm, spoke with us earlier.
Ukraine is definitely very unique in adapting and scaling up the new technologies in the battlefield. Having this experience and having the technology adopted and improved over the last more than 3.5 years of war, we definitely can offer something unique to strengthen the European defense system. The whole world is very much dependent on Chinese supply chain and Chinese components, electronic components. And that's changing both in Europe and in America. It takes time, obviously.
Now, for more on the story, we're joined by Bloomberg's global defense editor, Jerry Doyle. Jerry, what about Ukrainian drones is attractive to Western countries and customers?
Well, primarily, the thing that's most attractive to them is that Ukrainian drones have been tested over the last few years. All the techniques for manufacturing them, all the technology for keeping them in the air, keeping them flying in challenging conditions, those have all been tested in the battlefield, and that sort of data, that sort of know-how is extremely valuable to non-Ukrainian countries at the moment.
Jerry, when you look at how they can be supported by the U.S. and Europe, how does this develop? Again, it's the million-dollar question.
Well, so right now, Ukrainian companies making drones have quite a bit of manufacturing capacity. They're producing 4 or 5 million drones a year. They've gotten to the point where they can essentially supply Ukraine's war effort, and they have the slack to produce elsewhere. But they need money. They need money for research and development. They need money to expand their production capacity, to invest in new technology. And that's really where Western allies can help out, and where they see there being an opportunity for a win-win situation. They're able to export technology and military hardware that is in hot demand outside Ukraine at the moment, and in exchange they would get the funding to improve their own products.
Jerry, thanks so much. Jerry Doyle there, Bloomberg's global defense editor. Now let's stick with security. Moscow and Beijing remain top security concerns for Western officials. Bloomberg understands that the European Commission is exploring ways to force member states to phase out China's Huawei and ZTE from their telecom networks. Now, the UK and Sweden banned the use of Chinese vendor years ago, but others like Spain and Greece continue to allow them. Let's discuss all of this with Simon Gass, former chair of the Joint Intelligence Committee in the UK and former ambassador to Iran. Ambassador, thank you so much for joining us. There's a lot going on to try and understand allies and friendships and, frankly, enemies. Are we in a more uncertain world because allies and allyships are really being tested?
Well, we are in a more uncertain world, and one of the main reasons for that is that for many years our countries benefited from the security of a kind of rules-based international order in which there were principles, there were agreements, there was multilateral diplomacy. What we've seen over the last few years is some very important countries coming to the conclusion that actually that framework doesn't suit their national interests and stepping away from it. So we're now facing a world in which coercive behaviour is much more common than it used to be, and cooperative behaviour much less so. And that is why, when we look at the climate change summit, which is happening in Belém in Brazil at the moment, the United States has not sent a senior delegation. That is just an example of the way in which those collaborative networks are eroding.
So one of the key questions is, for example, how should the UK deal with a Hong Kong company, CKI, potentially buying Thames Water?
Well, the British government faces a dilemma. On the one hand, it really mustn't come to the conclusion that all Chinese investment in the United Kingdom is problematic, because it obviously is not. But it is interesting that in the summer the British government went out for consultation to ask the opinion of people who are knowledgeable as to whether water utilities should be added to a list of potentially problematic sectors for investment in the United Kingdom. And that was clearly in recognition of the fact that investment in water companies can be an issue. Now, in respect of CKI, it's already invested very widely around the world, including in the United Kingdom. It's a major shareholder in Northumbria Water, for example. So it isn't necessarily a problem. But what it does mean is that the British government is going to have to examine this case from a security angle and not simply from a utilities provision angle, and explain why it would allow that bid to be successful if it materialises.
I mean, do you think they should block it again? Because it could potentially be a risk to national security.
I doubt whether they should block it, but they might want to put in place some safeguards around it so that they can ensure things like continuity of supply and proper protection of data systems and so forth.
Ambassador, I mean, you were also posted in Iran for quite some time. There does seem to be more, operations or plots, coming from Iran that could be a threat to the UK. Have these gotten worse since the Gaza situation?
Well, they've certainly got worse in recent years, and the head of the British Internal Intelligence Service spoke recently about the rising number of plots which we detect in the United Kingdom. They're not generally against British citizens, they're generally against what the Iranian regime sees as Iranian opponents overseas, but also increasingly concerns about Iran targeting Israeli-linked or indeed even Jewish-linked targets. We've just seen, for example, some media reporting of a reported threat against the Israeli ambassador in Mexico City, for example. So this is increasingly a problem, and Iran really needs to face a united pushback against this sort of behaviour.
Do you think some of these threats or plots will increase as Iran feels like it's back down in a corner?
Well, I think the risk is that they will, but that is why we need international action to make clear to Iran that there is a price for this sort of activity and that we are capable of defending ourselves effectively. Obviously, Iran feels under massive pressure at the moment following the strikes by Israel and the United States in the summer, and the threat that this could happen again in respect of Israel. That is something which is really worrying people in Tehran at the moment. So they do feel cornered, you're right, and in consequence their instinct may be to lash out. We just have to make clear that that is not going to work.
Given all of the conflicts around the world, what do you think is the biggest threat to the UK right now?
The biggest threat to the United Kingdom at the moment, I would say, it's very hard to pick one threat, but I would say the increase in Russian interference in Europe is something which is really occupying people's minds at the moment. You will know that we've seen a significant uptick in drone sightings over airports, ships dragging their anchor over communications and energy cables, cyber attacks, targeting of Russian opponents overseas. All of it adds up to a pretty heavy charge sheet, which looks as though it comes from Moscow.
What do you think is Putin's endgame?
I think Putin's endgame, in his mind, is victory. And that is what the rest of us are determined should not happen. Russia must not succeed in Ukraine. And the Ukrainians, of course, are fighting valiantly to protect that. What we need to ensure is that our countries, including the United States, including all the European countries, are backing Ukraine so that they can continue in that fight.
But, Ambassador, victory as in actually taking bits of Ukraine, or is he still going after the whole territory?
I think the key, I would say, for Putin is that Ukraine has to fall within Russia's orbit. That is what Putin needs. Yes, he needs some territory from the Ukraine. He wants Donbass. He needs those areas that he has annexed, wrongly, of course, to Russia. But I think in his mind, what he wants to do most of all is to make sure that Ukraine is not able to turn westwards and has to look to Moscow for security and its future.
How do you view China?
Well, China, in that respect, of course, has been supporting Russia since the beginning. And if it is correct that they have not provided lethal equipment to Russia, they have provided everything short of lethal equipment and, of course, are buying large quantities of Russian hydrocarbons. There's been an intense dialogue with China over this. But China at the moment is determined to continue to support Russia. So that is a challenge for European countries, the United Kingdom, and of course for the United States as well.
Ambassador, thank you so much for joining us. Simon Gass, there, former chair of the UK's Joint Intelligence Committee. Now, we'll have plenty more, of course, throughout the day. We'll have a full analysis of what the markets are doing. Up next, Bloomberg Brief, and this is Bloomberg.